Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and today we are going to be looking at Ethereum as it emerges not merely as a cryptocurrency, but as a foundational pillar of the decentralized economy. While Bitcoin's BTC has long been heralded as digital gold, Ethereum is increasingly recognized as the versatile infrastructure powering a myriad of applications. We're talking of decentralized finance or DeFi, to non-fungible tokens, also known as NFTs, and real-world assets tokenization and artificial intelligence integration. That's what we want to focus on today. But before I proceed with our look at Ethereum today, guys, please note that this is not financial advice. These are just my own opinions, not meant to be financial advice of any sort. If you do require financial advice, by now you know what to do. Please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and it's not meant for UK audiences as well, because the UK authorities do deem anything crypto related, including this video, to be extremely risky, and you may end up losing your funds and all your investments. So please do your own research and exercise caution. That said, let's come back to this video where we are diving into Ethereum, which is now becoming part of institutional adoption. Institutions jumping into it. You don't need to take my word for it. Just go and see the recent developments indicating a significant uptick in institutional interest in Ethereum. For example, you got BlackRock, the world's largest asset manager, which has been making substantial investments in Ethereum, acquiring over 214,000 Ethereum valued at approximately 560 million through its iShares Trust since mid-May of 2025. So that is huge. Fidelity Investments, though, which has filed applications with the US Securities and Exchange Commission, or SEC, to launch spot Ethereum ETFs, signaling a strong institutional commitment to Ethereum's future. Other asset managers like Grayscale and Bitwise have also increased their Ethereum holdings, contributing to the ETH ETF inflows, reaching 3.3 billion as of June 2025. So this is no small change, people. Ethereum will be back. It is starting to come back, albeit at slower pace, but that's how things start. You just need that spark, and then things take off. And these moves that we've just outlined from institutional players like BlackRock and Fidelity underscore a growing confidence among institutional investors in Ethereum's long-term value proposition. So, to give us a good idea of where Ethereum could stand, let's first of all do a comparative analysis between Ethereum and Bitcoin. While both Ethereum and Bitcoin hold prominent positions within the cryptocurrency landscape, their investment theses diverge significantly. That's no small change either. You need to understand the two. On the one hand, you got Ethereum and its ETH token or ETH coin, which serves as a platform for decentralized applications, enabling smart contracts, DeFi protocols, and NFT marketplaces. It is also evolving as a monetary policy. For instance, post the merge, Ethereum transitioned to a proof-of-stake consensus mechanism, reducing energy consumption and introducing deflationary aspect through EIP 1559, which bans a portion of transaction fees. But with the introduction of layer 2s, that is probably going to have less of an impact. That's just my own opinion, of course. And we also have institutional integration with Ethereum, where Ethereum's versatility has attracted institutional interest, with various financial applications or products and services being built on its blockchain. That's on ETH. If you go over to Bitcoin, it's heralded as the digital store of value and is primarily viewed as a hedge against inflation, akin to digital gold. Bitcoin boasts of fixed supply with a capped supply of 21 million coins. It ensures scarcity, or it guarantees scarcity, which is a central aspect of its value proposition. Bitcoin is also simple and secure. It is a relatively simple protocol that is robust when it comes to security, making it a preferred choice for conservative investors seeking a decentralized asset. So that statement and that word conservative or conservative investors, that tells you where things might be heading. The modern investor or the young investor might want something interesting, and the conservative might go for Bitcoin. This is my thought process. This is where I'm at now. But then, of course, you could think, where is most of the liquidity? It is among the conservative investors. But that is just for now, because we all have time-limited life. We don't live forever. So those funds, at some point, they will transfer to younger hands who may have been playing into altcoins or other coins like Ethereum instead of Bitcoin. You need to be aware of that as well. I mean, even though gold has got all these qualities, how many people invest in gold? Same with this Bitcoin. How many people invest in Bitcoin? At some point, everyone who wants to Bitcoin will be in Bitcoin, but there will still be other investors. Where do you think they will go? Just food for thought. So, while Bitcoin offers stability and a clear value narrative, Ethereum's multifaceted ecosystem provides exposure to a broader range of decentralized innovation. Here you got Ethereum, which stands at the forefront of a transformative era in digital finance, offering a dynamic and versatile platform that extends beyond mere currency. Its growing adoption by institutional investors, coupled with its expansive ecosystem, positions Ethereum as a compelling asset for those looking to engage engage with the future of decentralized applications and services. You're talking of stable coins, majority are built on Ethereum. Most dApps, talking of your Aave, your Compound, most of them are on Ethereum. I think you get the gist here of what I'm trying to say. But while Bitcoin's role as a digital store of value remains significant, Ethereum's broader utility and integration into various sectors suggest a promising trajectory for its continued growth and relevance within the evolving financial landscape. Now, gold has been there for a long time, but no financial system, I think people tried, but it didn't actually work because they end up removing it. No financial system has actually been built on top of gold. If there is, it's limited. That's why gold does not absorb the value of all the assets. Talking of trillions of assets, the value is stored somewhere else, not just in gold. So that may end up being the case with Bitcoin. So I'm not trying to rubbish Bitcoin. I'm just trying to offer an alternative take on what's at play here. And if we are talking of the future of finance, this is what I could be talking about. The future of finance, it will be financializing the internet if there is anything of that sort. Ethereum will be your internet and everything will be built on top. And by saying that, I'm not saying Ethereum will be the only layer one to survive. No, it could be a plethora of layer ones working together, talking of composability and interoperability, forming a new financial layer for the masses that is decentralized. This is where things will be heading. Anyway, guys, those were my thoughts on Ethereum and its prospects and what I think could be at play here, especially with the excitement coming from newer entrants in terms of institutions who are coming into Ethereum and starting to put or add Ethereum to their treasuries. What are your thoughts? Let me know in the comment section. Will we ever get to a point where Ethereum will become synonymous with the financial platform of the future? At the moment, there are questions, but could be that this is what Ethereum needed. It needed to be formed and established, and that also, criticism is also part and parcel of being formed and being established. Let us know what you think in the comment section, guys. Until the next one, FD for Sage5.tv signing out from Dubai.